Good afternoon, everybody. This is Rob Seaver with Leads Counsel. I'm the Executive Director, and I'm bringing you this week's webinar in our leadership series. I'm super excited about this. I'm not going to really spend a whole lot of time. Most of you already know what to do. In your control panel, our panelists today have agreed to answer your questions. And if you have a question, there should be a question area in that control panel. So please ask those along the way. If we can get to those, we're going to certainly try to answer them. And if we can't, we're going to do our best to do them afterwards. I'm going to go ahead and turn this over very quickly to our moderator today, and then I'm going to back out and come back a little bit later on. But super excited to bring you some verticalized content. We've been hearing from everybody that let's get something not just generic or not just about compliance and regulatory. Let's bring some of the verticalization, insurance, mortgage, whatever it is, and talk about that. And so today we're bringing it to you right now. And I'm going to move this over to our moderator for the day, Jamie Pickles of Jornaya. Almost anybody who has anything to do with insurance knows this guy. At Jornaya, he's Mr. Insurance. Jamie, thank you for bringing this. I know you've assembled an esteemed panel of panelists today, and I'm very excited to hear what you have and the data that you're going to show. That's going to be something I think is a reward for every attendee today. Jamie, it's your show. And you're muted, Jamie. We talked about this. You want to try it again? Jamie, it's your show.
Thank you very much, Rob. It's great to be here, and thanks everybody for joining. And Rob, thanks so much for giving insurance the stage. We really appreciate that and are excited about this session. As Rob mentioned, I'm Jamie Pickles, GM of Insurance at Jornaya. This afternoon, we're going to talk about the impact that the pandemic has had on the personal lines insurance market. So how consumers have behaved over this time. And how carriers and agents have responded, and what to expect for the remainder of the year, most importantly, right? There have been some unusual challenges and opportunities that we've all faced over the past 3 months, but by and large, the industry has remained very steady and strong, as it has historically when these types of crises have hit. To learn kind of what's next for performance marketers, in the insurance space, I'm joined by 3 insurance experts today. We have Donna Dermer, who's the SVP of Marketing at iptiQ by Swiss Re, Perry Olson, who is a State Farm agent, and Mike Myers, the Competitive Intelligence Leader at USAA and President-elect of the Society of Insurance Research. Everybody, thanks so much for joining. Really appreciate you taking time to participate and provide your insights. So for each of you, why don't we go, Donna, we'll start with you. Why don't we go around and please introduce yourself and your company and your role, and describe what you're most looking forward to as the country reopens.
Oh, sure. Thanks so much, Jamie. So Donna Dermer, I head up distribution marketing for, as you identified, Swiss Re's operating entity called iptiQ. We are an insurtech that resides within the broader reinsurer of Swiss Re. And we've been around for about 5 years. And with that, we really differentiate ourselves in the insurtech space in that we function both as a state-of-the-art digital platform, in addition to being the paper, a life and health insurance carrier, in addition to being a reinsurer. So we're really designed to help carriers and distribution partners build or offer instant decision life and health insurance solutions for customers. And we also are enabling partners really to help build out their own marketing and sales capabilities with our best-in-class digital platform that's truly encompasses the entire value chain. So excited to participate and really excited about as far as the country reopening. I'll be thrilled to really be able to have face-to-face interactions with my colleagues and our various distribution partners and other third-party administrators that we do a significant amount of business with. So excited to have those human-to-human interactions again. So that'll be a thrill.
Thanks, Don. Appreciate it. And I think everybody's would probably agree with you on the line here. So Perry, why don't you go next, if you don't mind?
And what was your question on that, Jamie? Was that on Oh,
what you do and what you're most looking forward to for the.
oh, okay. I thought you were going to ask me a specific. I mean, I'm a State Farm agent. Been doing this since 2006. I started with one team member and have grown to the largest State Farm agent in the country. I have 36 team members. I have 2 offices in Las Vegas. And I guess I continue to build it year by year. I've always been a big fan of like buying leads and live transfers. I'm not, I wouldn't call myself an expert in that field by any means, but I deal with multiple different companies out there and buy from multiple companies, whether it's leads or calls. And then one of the things I think that I've known for most is just giving back to people and giving back to for free, is that I've spoken around the country. And whenever I do that, I always speak for free and just give people, you know, advice on buying leads and how to process those leads, or buying live transfers, and how to and how to convert on them. You know, like sometimes people run into situations where they can't convert, and you know, I give them recommendations of like excluding, you know, different carriers if you're not competitive in that area, or going after people that have been insured longer, trying to help them figure out what their niche market is. So but at the end of the day, just a State Farm agent. So
Thanks so much, Perry. And I've had the privilege of meeting you in your office in Las Vegas and seeing the operations and the team. It's quite impressive what you've built. And it's an understatement when you say that you go around and do some speaking. That's like, you know, I know that you've got almost a cult following in the agency community, and in how to best to grow an agency. And we're really excited that you could join us today. Mike, why don't you go next?
Sure. First of all, thanks for having me here today and giving me the opportunity to represent the Society of Insurance Research. In my day job, I am a lead competitive intelligence analyst at USAA, primarily supporting our life insurance company. And my role requires that I monitor the external environment, consumer trends, competitive offers, and help our leadership team make great strategic decisions. At the Society of Insurance Research, I've fulfilled a variety of roles, from being a track chair for our annual conference, preceding you, Jamie, as the Vice President of Marketing. And this year I'm the President-elect, and I'll be taking over as President in October after our annual conference. Excited today to share some primary research that we've done to help our planning process, and also to give back information to the industry that we support.
Great, thanks, Mike. And we'll dive into some of that research, and I know the audience will be interested to hear what you've learned on that front, and what to expect the remainder of the year. So I've got a couple of slides I'm going to show everybody. We're going to go through some data here that you may find interesting. Can you guys see my screen? It should be a graph without a line.
Yeah.
Cool. Okay, so what I've got here, what I have here is a chart that shows the changes in the unique the week over week unique consumer counts. And you know, Jornaya has kind of the overview perspective of what's going on in the price comparison shopping world. We witness the events across you know, hundreds, if not thousands, of websites of consumers shopping for various major life purchase items, like auto insurance and home insurance, health insurance, life insurance. I'm going to show you kind of some of the trends that we've been seeing in consumer shopping activity over the past 3 months. And we're going to start with auto and show, so these are unique consumers. And we define unique consumers using Jornaya's identity graph, which resolves disparate website sessions and consumer interactions to a unique person. And we'll start with the week of March 2nd, and then as the baseline, and you'll see how over the past 3 months that you know, auto insurance has had a significant variation over that time frame. We saw a pretty dramatic increase in March compared to the first week of March, so significant growth. And we've kind of ended the month of May a little bit below where we started the first week of March. And some of the drivers here, there are a lot of undercurrents: employment, stay-at-home orders, interest rates, premium rebates that auto insurance companies have been giving their policyholders, a reduction in traditional advertising that has left them with excess capacity in their sales centers. Agents are sitting at home, not in their storefronts. Perry will talk a little bit about that. So they're looking for leads. So the demand from insurance providers on the performance marketing ecosystem has been very strong. And then finally, kind of what's going on in mortgage, and I'll share a different slide on that to explain what's going on there. But here are some kind of key events that happened along the way. So the Fed reduced their benchmark rate on March 3rd by 50 basis points, and then again on March 16th by 100 basis points. And plus the stay-at-home orders started then. And then in mid-April, from the CARES Act, the stimulus checks started arriving in consumers' laps. So they started using that to spend on various things, including auto insurance. So that's what drove that blip there. So this is the auto insurance picture, and I thought the group might be interested in seeing what has happened over this time frame. What I'm going to show now is, so Jornaya's customers query us on a lead event before they buy it for quality and TCPA compliance needs. So we see every lead that a provider is looking at. So what we're showing here is we're still on consumer accounts. I'm going to show, this is home. That's what's been going on at home from consumer shopping activity. This is life. We saw a big increase in March in life. And then health, we saw a dramatic increase over that time frame. So, and then if we look at year over year in May, comparing May of 2020 for auto to the same time frame last year, auto insurance shopping is actually up 41%. So dramatic increase. So even though it's down from first week of March, it's still way up year over year comparison. Life's a little bit different story. It's down 20% in May 2020 versus May of 2019. And health is up 79% in May this year compared to last year. So a lot of health insurance shopping activity going on. So this was the mortgage dynamics that I was talking about. So again, when a customer of ours queries us about a mortgage lead or an insurance lead, we count that, and we can show all of those events over time and aggregate them. And what this shows is kind of the week over week change of the queries that we're getting from our customers for both insurance and mortgage. And here I used the baseline of basically the first week of January, which is December 29th, as the baseline or 100, and then everything from that point changes as we look at the week over week differences. And again, here's insurance. As you can see, January is typically the high water mark of the year, and then it kind of slows down a little bit. But then you see in March, based on the prior slides, we saw a big increase over that time. Mortgage was a different story, and the query counts that we saw the first week of March fell dramatically, and that's basically driven by a lot of the mortgage providers were getting kind of organically inbound inquiries from consumers as the rates changed or dropped, so that they were their call centers were flooded with all sorts of inquiries. And they basically put the brakes on the performance marketing ecosystem. Their query counts dropped dramatically, and that line just plummeted. So you can see the corresponding increase in insurance around the same time. So again, this is one of the key undercurrents, if you will, that drove insurance volume, both from the performance marketers spending to drive consumer leads, clicks, and calls, and the insurance providers buying that media. So I thought everybody'd be interested in that dynamic. It's really fascinating. I've never seen this before. My counterpart, Mike Eshelman, and our leader of the Consumer Finance Group, had never seen this before. It's a really fascinating dynamic. So the last slide I want to show you, because I think there may be some folks interested in what's going on in TCPA world. This is just kind of a final point here. In May of 2020, we saw more inquiries than any other month in our history for visual playbacks, which is what our customers ask for on a lead event when they get a consumer complaint or lawsuit. So that's probably all that increase in volume insurance saw, and some of our other verticals saw from March and April, is having an impact in the number of complaints and lawsuits in May of 2020. So I'm going to stop there, and let's go back to our Q&A. We've got a lot of questions here for the panelists. Hopefully you aren't seeing my screen anymore. You guys, Perry, can you confirm that you're not seeing my screen anymore? All right, good. All right, so Donna, let's start with you. So you mentioned in your opening remarks, IFTQ's in its 5th year, serving pretty much the middle market's life insurance consumer as a B2B to C technology and product provider. So from your perspective, how has the pandemic influenced life insurance consumer behavior in terms of shopping and buying and even retention?
Well, no, so I find it really interesting. I'd love to take your charts too and evaluate how they trend according to Google Trends, which we do a lot of Google Trends analysis as well, and understanding how the consumers are going out there from a search perspective. What are the terms that they're using, what brands are being searched, long tails and short tails, and trying to get a feel for what that opportunity looks like and what it's demonstrating. We definitely noticed for first quarter a historical high where life insurance actually surpassed some of the health insurance trend reports that we were looking at. So definitely 2020 on both life and health were significantly higher than 2019. But with life being that much higher, it was also reflected in just the number of applications that we've received for the first quarter. We hit a historical high for us, and we have just had just the production numbers have been really pleasing for us, obviously. But also, we also do an extensive amount of user experience testing and panel research with A/B testing journeys and looking at how good and successful what that learning has to do back in understanding shopping intent. And definitely with COVID, when you look at the research that was conducted with those panelists, those panels are actually video and audio taped as well for our analysis, both from a semantics perspective and then also with the language that they're using and what they're reflecting and how they're interpreting what they're viewing in the journey. So with all of that analysis that we're getting both from Swiss Re and from IFTQ research, we're finding that the pandemic obviously is driving a lot of fear, which drives financial protection requests from consumers. And the desire, it's always where you always hear numbers out there in the industry about they plan to buy or the intent is there, but in this case, we're actually seeing them follow through digitally, and the conversion is better for our self-serve and agent journeys than ever before. So we're pleased with that. And I think the lasting impact that we've gained traction on is just with that online adoption and we see more online digital advertising being generated. Right now, the budgets are low, so we're not seeing a lot of spend levels from our partners or even from the industry in general. But I think if that's out there, the demand and the searches are definitely being made. So I think it's a general opportunity for the industry in whole. If they're out there from actively doing the advertising, I think they will also be experiencing better click opportunities, and we partner again with other distribution partners to help them optimize their journey so that they can take advantage of it.
Great, thanks, Donna. And one of the things we talk about a lot with our carriers and our publisher partners is, as demand surges from a consumer perspective and volume goes up in shopping, how has quality or intent performed with that increase in shopping activity? Can you comment at all on kind of the intent of the consumers who are getting into your funnel? Is there any difference? Is it up, down, about the same as usual?
Yeah, no, I would say intent. Now, there is fraud is always a challenge for us, but we use a lot of data sources, including Journaya from a fraud perspective, and even from a TCPA, making certain that they opt in or there's a recognition that they want to be contacted. But it's we've been very pleased with the upturn in our quality for this year. We've actually had probably bigger challenges in 2019. But the intent is there, and I think again they're surrounded by media sound bites of deaths and witnessing people that they're surrounded with face masks, and that's driving a protection element that's making them really want to drive forward with getting insurance. And so if the right sound bites are out there from a marketing perspective as it relates to life insurance in particular, or health insurance again, they're in a position where they're wanting to buy. So again, like not only the intent, but that desire and that follow through, we're definitely seeing it digitally online.
Great, thank you very much. Rob has asked me to remind everybody to, if you have questions, to just type them out in the chat box and I'll pick them off and I'll add them to the list of questions that I have. Also in the chat box, you'll see Rob has posted a link to the results to the survey that Mike will be talking to. So you'll have a lot more detail behind that, so you can access that in the chat box as well. So Perry, let's talk about agents. Agents are, if you look at kind of the monetization of leads and calls, agents make up the majority of the, of the monetary flow in terms of demand. So what agents do and the demand, et cetera, is critically important to the performance marketing ecosystem. So as agents kind of return back into their office and hope some sort of normalcy in terms of business, what do you see in terms of demand from the performance marketing ecosystem, leads and calls from the agent population?
Well, I could tell you, and I'll get into like a little bit, that I feel like it's going to get kind of crazy out there. There's going to be more leads and calls bought within the next couple months than there's ever been. And what I relate that to is that I consult for a different company, an online SEO company that does that business out here in Vegas. So I go out there and I've been on some of the demo calls, talking to the agents in the background that have Google Ads budgets out there. And almost every single person that I've spoken to has said that they're going to increase their ad spends in the month of June, July, and August. And their thought process behind this is that if you see the insurance carriers handing out dividends out there, or whether it be rebates back on their insurance policies when they renew, or over the months from like March to May, that's what all the insurance companies were announcing. So with that, it's caused like a lot of people to start shopping, but it's also at that same time, a lot of companies have been working with people out there due to the virus. They lost their job, so they've been able to defer their payment for a month or even 2 months. And now what's happening is, what we're starting to see on the agent side is that people are, now it's come time to pay in June. And if you're not working with the customer on that, the customer is just going to jump ship. And then instead of pay a large bill for whatever they had built up in March, April, May, instead of paying that back to their current carrier, they're going to just leave, not pay the bill, and then that's what's going to cause the shopping. So it depends on how, as an agent standpoint, and I've probably spoken to, in the last month or two, I've probably spoken to about 100 different agents, and that's just not with my carrier myself, but I've also spoken with other carriers and other brokers out there. So it's very interesting to see what everybody's approach is. A lot of people's approach was trying to do whatever they could to work with people, but at the same time get ready to ramp up their marketing. And I can already see it. The demand is coming. People, like everybody knows, when I speak about the 6-step internet lead process, and I've had more requests in probably the last 2 weeks for that process again. than I have in the last basically year. Just more and more people are continuing to reach out to me for that process. They're like, hey, I had it, where's it at? Because they're ready to ramp up. And I was looking at my email before the call, and I've already got a couple emails in there. People are like, hey, who are the companies again that you recommended for live calls? And he wants me to call him back on that. So as we're sitting here talking, I'm getting emails from people wanting to know who I'm using for live calls, who I'm using for leads, where should I look for quality, and giving my recommendation out there. So I think that it's going to be, a heyday for like a lot of people. And the other thing is that the conversion on the live calls, I feel like is going to be even better than it was before, because a lot of agents struggle with this whole live calls that they like. If I was in Las Vegas, I wouldn't want to take calls in Reno, or I wouldn't take my calls in Arizona if I was licensed in other states. Now people are going to be more apt to take those calls in, because they know that people aren't walking into the office anymore. Because a lot of people didn't want to take a call. If I was a State Farm agent in Vegas, why would I take a call in Reno? They could walk into the agent's office down the street. Well, now nobody's walking into the offices, so more people are apt to do business over the phone. And then if the lead companies were smart, they would be pitching that to their current customers, saying, hey, you should branch out in your radius to take more calls, because people aren't walking into offices anyways. So I think that you're going to see more leads and calls bought in the next few months than you've ever seen before.
That's great news, and I suspect that more agents who've never bought leads and calls before will also kind of join the game as the word spreads, if you will, as in terms of where the consumer activity is happening. Interesting that you mentioned the kind of the dynamics of where people are, et cetera. If you also think of and the premium rebates, if you also think of the potential rate changes in the auto, home, and maybe even health insurance prospectively, that could spur some consumer shopping activity as well. So great to hear. And I'm sure there are challenges too, as new agents who come to the table that haven't done this kind of marketing and sales before. They're going to need some help. So as you point out your 6-step process, I'm sure there's going to be some challenges in making sure agents are best prepared from a process perspective for handling leads and calls if they've never purchased them before. So great, thanks so much. So Mike, let's talk a little bit about the Society of Insurance Research. What is it, and what is this survey that we keep talking about that you're rolling out?
Yeah, well, again, thanks. So the Society of Insurance Research is not a new thing, right? It was actually established in 1970 as a nonprofit that supports insurance research practitioners. So we're happy to be celebrating our 50th anniversary in such a unique year and situation that the rest of the country finds itself in. I think of the SIR as a community of not only insurance practitioners, but people who produce and consume insurance research. And that can cut across a lot of different roles. But we find that our members are most oftenly found in market research, competitive intelligence, product development, innovation, actuary, and underwriting. Those are the folks who primarily show up at our events and become members, especially in carrier roles. We have over 70 carriers represented in our membership, of which State Farm is one. I think we have a member from Swiss Re as well. We have representation from over 30 solution providers that support the insurance industry, as well as academic institutions, governmental agencies, and other nonprofits. Now, we decided to take on this survey for a couple reasons. One, we have 2 in-person events a year. The first event normally occurs in the spring and April, and it's a workshop to teach research-related skills. And I like to think of it as one of the first, well, not like to think of it, it brings back bad memories actually, but it was one of the first event cancellations, I think, that happened in the COVID environment. We made that difficult decision near the end of February as we saw insurance carriers start to announce, and talk about travel restrictions and the other news breaking out, and we just thought it wasn't practical to ask people to meet in large groups. We also conducted member and non-member research to ask them about the different things that they value and we're expecting SIR to deliver. And we started seeing a prevalence of demand for virtual events. And another thing we did is we compiled a group of free research related to COVID that also is relevant to the insurance industry. And we published that compilation of research guide on our website and made that available to the industry for free. And so as we started planning for our fall event, our annual conference, we thought it was prudent to pulse our members in the industry on their ability to travel, and if they were to attend a live event, what precautions and what situation would need to be in place for them to feel comfortable. And we were really, I think the results were very insightful, and we're making those available today to the listeners here and on our website to the industry. And hopefully you get a lot out of it, because I think this group probably attends a lot of events and or host events, and it would probably be good to know if people are going to be showing up for the rest of this year.
Great, thanks, Mike. Really appreciate that, and thanks for all the great work you do for the Society of Insurance Research and the industry. And we'll dive in a little bit, a couple minutes. We'll dive into some of the key findings that I know the audience will be interested in learning about. Donna, let's circle back on life insurance. We've talked about this, right? The iptiQ was kind of born in great economic times, and the first 5 years of its existence, the economy was great, employment was good, the economy was rolling, right? Now that we've kind of hit this wall, which we hope will be temporary recession, I'm curious about how iptiQ, even before this happened, positioned itself for continued profitable growth. I would think that life insurance is an optional product. It's not a required like auto or home or health. So it may be something that consumers don't have money to allocate to. So how has iptiQ positioned itself for continued profitable growth even in recessionary times?
Yeah, no, it's a great question, because life insurance, to your point, because it's not a required purchase, it's an optional coverage for consumers to think about, and it's always been coined with kind of the sales process of sold versus bought, right? Because it's difficult for society in general to face mortality. So that's why final expense has usually been something that's always had a lot better saleability with direct response than some of the other products. But now, faced with this pandemic, and then also faced with the recession, there's, insurance, and life insurance in particular has a really good survival rate through times like this. There's always a need for affordable risk mitigation solutions, and that's why we'll see life insurance even grow and expand during this time period, with the need and recognition of that risk mitigation. So consumers now are being faced, as I mentioned and touched on earlier, because of the constant noise and visuals around COVID. And then in addition to what they're feeling with their pocket and the unemployment rate at the point that it is, and yet they're going to still want those protection elements. And we as an industry just have to do a really good job with making certain that they understand even more about insurance, and recognizing that protection needs to be put in place. So iptiQ in particular, we've demonstrated that we can continue to see significant value over other solutions, and we're using unique risk tech and data to capture higher approval rates and better conversion rates. And we're also strategically positioned to excel and advance, throughout this whole recession. Also, even looking at our pricing policies, we look at our claims experience, and we look at other our competitive advantage with how we're priced in the market. And then we also now we're really monitoring these low interest rates to say, hey, for this adoption and for consumer demand, where are we from a pricing perspective? Do we need to increase or decrease? Or those are always constant considerations, but we really understand so much from the data that we collect, the research that's being conducted both on the product side and on the consumer side, and setting ourselves up for success through time periods like this that are tumultuous or where others may not be able to survive.
Thank you. I appreciate that. So from a provider's perspective, are you, still hungry for new business? Some people wonder, since, life insurance industry has, had some impacts in terms of interest rate changes and the difficulty around doing some of the in-person underwriting activity. Have you changed your appetite at all going forward for the rest of the year? Are there any specific product types that you're emphasizing over others?
Again, great question. I mean, it's for us, our life and health portfolio, life is definitely a driver just because we've got more maturity, having started with that. On the health side right now, we only have Meds Up, and we'll be introducing critical illness a little bit later in the year. But no, we are geared for significant growth in both areas. We've been incredible with being identified with the amount of premium. I mean, we've been probably the fastest growing insurtech, definitely in the Americas, and from a premium and placement perspective, and the amount of coverage that we have in force. But it's our appetite is still there. We are consistently looking at the different business lines. P&C is in our horizon as well as a possibility, if not on our own paper from a reinsurance perspective. And I know, based on all the data and the research and the relationship that we have on that research side, we're definitely not pulling back anything. We're growing and expanding our distribution partners significantly as well. So this year we're going to be doubling the amount of partners that are actually distributing our product, and we're building out from a marketing perspective, a lot of testing capabilities to enable those partners to do digital marketing or find digital optimization through our platform or on some of the capabilities that they're building on their own. So that's part of the value proposition that we're bringing forward, and we certainly see the sales opportunities to support all those additional value propositions that we're creating.
Terrific. Thanks so much, Donna. Perry, it looks like we have a question from the audience. I don't know if you saw it, but the question is, on the notion of the premium rebates that the auto insurance carriers have been giving back to policyholders. I think State Farm announced initially a $2 billion give back, and maybe even more since then. So question is, how have agents in general, not just State Farm, but agents in general that you talk to, managing through that process? I'm sure they're impacted from a commission perspective, maybe. I don't know. What's going on with all of the impacts of the premium rebates?
Well, I mean, so there's a couple of different things. Is like, it depends on if it's a premium rebate. It depends on if it's a dividend. Things like that can make a difference on whether it affects the agent's compensation. But before that was announced, like, one of the things that like, I think State Farm was one of the last ones to announce, just speaking from an agent's perspective, one of the things that I thought of, like, even if it hurt my commissions at that point, I wanted them to do something, because I felt like, if there was less driving, less accidents, but I'm not the guy that calculates that yes, we should give back, even if it hurts my commission, because the way I looked at it is that if they were able to cut people's rates and I could help retain those customers because I helped them through this tough time, then I was going to be able to retain those customers over a long period of time. So I looked at it that standpoint of like, this is a good thing for everybody, even the agents, get it out there, because if you're representing that company, you want your company to do something. So that I was thinking of like all the advertising, like I'd spent like 300,000 in advertising like in 2018 or 2019, like thinking of all that marketing dollars I'd spent that could easily walk away, because I spend a lot of money on leads and calls knowing I may not make that money back up for, you know, a year to year and a half later. So that was, I haven't heard many complaints. I think more of complaints is that a lot of agents, they wanted to see companies do more, you know, and there's more built into that, where, you know, some of the agents were on a renewable, you know, like commissions only, that we make commissions as long as people are paying their bills. If you have team members that work for you, were you able to apply for a disaster loan or the PPP loan? So there was other avenues that, you know, that agents could do to like help sustain during this time, where we wanted to get back to the customers. And when that was announced, it was nice when people called in and we were like, this is what we're able to do for you. And then going back into like one extra step on this is that the devices that companies are now requiring, or not requiring, giving customers the option to put in their car, you know, to see how far they're driving or how they're driving. That has had an uptick more than anything, is that the people that were already subscribed into that, you know, are driving less now, and will probably see even more of a discount later because they've had the history to prove it. So, but yeah, not complain. I think the more complaints is that people want to see the companies get in there and do more to the best of their ability, and there more may be able to come. I don't think anybody wants to hand everything away right now. They're just taking it, you know, month by month, as all of us are.
Appreciate you taking that question, Perry. And I hear in that also an opportunity to have an interaction with your policyholder on that topic. So having a conversation with a customer can always be a good opportunity to, you know, make sure that they have the right coverage, the right policies. Maybe you add a different line of business to the household. So I would see that interaction as a positive opportunity and conversation. So that's good stuff. Have you heard agents at all talking about their companies giving them more budget to buy you know, media from the lead and call generators? Or, you know, how if more agents are going to start, you know, jumping on board to buy more leads and calls, are there companies lending any additional financial assistance to allow them to accelerate that, or are they on their own?
From what I've heard, you know, I've spoken to multiple agents from different carriers. It sounds like they're increasing, you know, like partnerships with like the agents to incentivize them to go out and try to do more. So the people that were already in the game are really going to be like a way ahead of this, that already have the relationship with the lead companies. But yeah, that's what I have seen that coming. And it, you know, and maybe it's more, I don't know how I don't understand it, like, is it like, you know, if I'm a lead company sound out there, but I think it's where the companies that are going to win on this are, they're going to be the companies that have actually agents in the field. And the reason why I say that is because my office is my little office by itself. I don't have a corporate building where I walk into there where there could be, you know, hundreds of other people working all together. So what basically happened, and when this whole virus thing hit, is that the companies that had call centers and everything else all sent everybody home, and everybody wanted to work from home or not even coming to the office anymore. So if they were a call center trying to get all this stuff done, they got hit the worst, where the agents like myself that have a team, and I have a couple offices where I'd spread everybody out, it was business as usual, where we could have people and spread them out and make sure that they weren't contaminating each other. But then as far as like business written, April was my best month of the year, followed up by May, just to kind of give you an idea. So I feel like the companies that are going to win are with agents and brokers in the field representing their company, rather than if you're a large carrier and you're only working from a call center standpoint. I think they're going to struggle to like recover because they weren't set up and ready to go to have everybody working from home.
Appreciate that. So what I hear again to the performance marketing lead generation side of the equation is all good news, right? The profitability of the product is going to remain strong for the near term. The agents are going to be leaning more into buying leads and calls. They're going to get more financial assistance from their carriers. So that all spells, good news, I think, for performance marketers. And we'll get back to that in a second when I get on the next round. So Mike, let's talk a little bit about the survey results. A lot of people on the line and who will view this on demand, like Rob said in his introductory remarks, go to events, LeadsCon, InsurTech Connect, Digital Insurance. There are a host of them, right, where they do a lot of business with the insurance community. What does the survey reveal, the findings say with respect to what people should expect from the insurance industry traveling to events and conferences for the remainder of the year? I can't hear you. Can't hear you, Mike.
Okay, I've said I wish I had good news. Okay, so you might have seen the smile and thought I was gonna, have a reveal that would say they're back. They're gonna show up, but that may not be the case. So for our survey, and again, we made the link available and everybody can download it, but I'm just gonna kind of run through a couple things here quickly. So far, about 98% of our respondents had, especially from carriers, had travel restrictions in place. 60% of those are indefinite. Right now, their companies are being very precautious about when they're going to allow employees to attend events again. We asked respondents, when travel restrictions are, removed and you're able to travel, how comfortable will you be doing so? And about 57% of the carrier respondents said that they still wouldn't be comfortable traveling, even if they weren't being restricted by their companies. And when we asked if that comfortable, if they were more comfortable traveling close to home or nationally, you can imagine that we saw a wide varying response. As an example, I think 10% were only very concerned if they were traveling in their city. 18% were very concerned traveling in their state, but 42% were very concerned if they were traveling nationally. And that may involve have to get on a plane and do all that kind of thing. They really didn't want to do that at all. And we asked specifically about attending events. 60% of the respondents said they had a strong preference for attending virtually. Only 10% of the respondents said they wanted to meet in person. And there was a mix of folks who said they could do either. So none of that really bodes well, especially in the short term, for attending in-person events. But I wanted to preface all that with saying timing is everything in surveys. When we did our member survey in February, the number one thing they said they valued about SIR was our in-person conference. And I think that's because, of those who've been, they think of it as a family reunion. They see their same friends every year. They get together, they have a good time, they learn a lot, and they enjoy it. When we asked our non-members who weren't as familiar with SIR in early April what their preferences are, it had already flipped to virtual, and in-person events were further down the list. Now, I imagine if we did this survey again in late summer or early fall, and we haven't experienced any new spikes and state reopenings go well, and it's business as usual in restaurants and all that again, we'll probably see different results. But as of now, I think there's a lot of concern with traveling again. And I just wanted to say that if they are going to meet in person, we also asked what precautions do you need to feel comfortable? And as of now, that no spikes in the preceding months to the event, certification that local authorities say that it's safe to meet, and then that they're taking precautions like the event providing hand sanitizer and social distancing and not cramming everyone into sitting side by side in a big room is going to be critical to making folks feel comfortable. But what they didn't expect is that there would be a vaccine, and they didn't really feel strongly about wearing masks at the time that we did the survey.
Great, thanks. And as Mike mentioned, the link to the full results of the survey are in the chat box, and Rob may be able to send that out afterwards. Thanks very much, Mike. Very, very important findings, and it'll be interesting to see how that attitude changes over the course of the summer as things hopefully clear up. And speaking of clearing up, the duration of the virus, the lingering concerns about the virus, Donna, are there any impacts that you see on the demand that carriers will have for Medicare supplement products, which iptiQ now has in its product suite?
Yeah, no, I think, especially with AEP being set up for, this fall, and a lot of carriers are still going gung-ho just with the senior population. There's obviously people are looking at repricing and understanding what that scenario looks like in concert with Medicare, getting a glance at their claims experience at this point right now, and then determining if there need to be some repricing scenarios that are going to take place. But I think the appetite, again, is still very strong. And what's interesting is that we've gotten with our distribution partners in particular, we've got some very large partner IMO organizations and NMOs, and their feedback is that although they recognize some of the challenges that they've had with face-to-face or the lack of face-to-face interactions, their adoption for our product solution and for our platform has been incredible. So I'm doing just a significant amount of digital webinars and education with agents who are accustomed to even paper applications and those submissions, where now they're really adopting more of iPads and having the actual selling experience done completely differently. And we've had to create an application that was mindful of that, with agents having to adopt technology, and what does that experience need to be for them, in addition to also knowing that we're dealing with the older population. So the appetite's there. I think our growth right now, it has definitely slowed down. Our life has definitely created much more premium, but during the open enrollment here. But as we gear up, we've generated a lot of excitement, and I think there's a big interest to still have a really successful AEP.
Very good. Thanks so much. So performance marketers are, sounds like that is a great market to drive high intent med sup prospects to iptiQ and its distribution partners. That's great news. And as we've talked about over various other places, that market only continues to grow. So that's all good news. So we're going to go ahead and wrap up here with a final question to everybody. If you don't mind, Perry, we'll start with you. What is the one thing you'd like to leave the audience with respect to the remainder of the year, and what you're either excited about or what you're expecting, or from the performance marketing publisher side of the equation? Perry, let's start with you.
If I'm speaking with like lead generators, aggregators out there, just companies that are working with agents themselves, is to get back out there and build those relationships back up with people. I've even spoken at events before where I've said, hey, if you've ever had let's just say that you bought leads from somebody at one time and you didn't think the leads were very good, and you left the company because of that. I've told the agents, go back and rekindle that relationship. So if I'm telling like the companies out there, I'd say go back, rekindle some of those relationships with some of those agents out there, because I think there's going to be a lot of shopping in the auto the field because everybody's starting to take a look at that stuff again. And then just the people, just producers, insurance producers in general, just getting back out there, think differently. If you've never done, leads before, do the leads. If you're doing leads, and supplement it sometimes to start trying some of the live calls. I talk to like a lot of agents on a daily basis, and people get scared away by how much a live call costs. And I remind people, you don't have to take 10 of those calls in. You just try to take 1 or 2 in, something that's like inside of your budget, and just see if you get an ROI on it. So that's my, I try to tell people, like, encourage them to get out there and just do it differently than everybody else. When the virus hit, everybody kind of backed away and stopped advertising. And I thought, this is a perfect opportunity. I'm going to push forward and to just try to drive more traffic, to my office, so that my agents can convert with more people, have good conversations, and go from there.
Fabulous. Great advice. Thanks so much, Perry. Mike, what's the one thing you'd like to leave the audience with?
Always turn off your mute before somebody asks a question. No, so, I think we're all trying to find the silver linings in this situation. I know that SIR is really going to grow their virtual capabilities through this. We're making a pivot in really trying to strengthen those offerings. I think that even once the COVID situation is under control and everyone's able to return to in-person events, I think we'll come out of this a stronger organization. So never let a crisis go to waste, and try to come out of it stronger than you were before it.
Great, Rob. Let's give Donna 30 seconds to a minute, if you don't mind. We'll leave this, and before we turn it over to her, I want to thank the panelists for joining. Really appreciate it. Great insights. Thank you so much. Donna, we'll end with you. What are you looking forward to, or what would you like to leave the audience with before we conclude our session today?
Yeah, no, I really echo what Perry's saying with regard to having agents and giving lead warm transfer digital marketing a try. In the life space, there's only about, I just saw a LIMRA study that interviewed 41 carriers with regard to their life insurance, and only 17% of them identified that they would consider themselves having strong digital marketing capabilities. So there's a vast amount of opportunity there for them to either work with their carrier or work with iptiQ, or I think the adoption now with COVID has accelerated a lot of the strategic business plans that are out there. And I would encourage performance marketing to really get involved in understanding. And we share baseline metrics with regard on the life and health side on what we experience as a carrier, and with some of the other user testing that we do on a cost per lead or a cost per application and a cost per policy basis. So if there is an interest, certainly happy to engage from that front with if there's interest there in seeing what that would look like. But we're doing a lot of modeling, and we just encourage people to get involved and look into iptiQ as well to see if there's a potential opportunity to leverage our accelerated issue products. So, but wishing everyone well with safety and good health and financial success during these very tumultuous times. So thank you very much, Jamie.
Great, thanks, Donna.
Well, look, I have to be honest, I'm super excited about being able to sit through this and learn from some very top people within the space. Perry, Mike, Donna, Jamie, thank you for the heavy lifting on this. This has been very exciting for me in performance marketing and lead generation. And I think we heard this throughout the hour. There are some very bright spots in the industry, and they're coming from insurance. That is something I'm hearing from several players within the space. A lot of these people who have multi-verticals that they attack, whether it be mortgage, home services, or whatever, the one area that I'm routinely hearing the most activity, the most positivity, the most, just outlook on what the space has to offer, insurance is at the top of the list right now. So this has been very relevant, very timely. Michael, the stuff that you shared with the audience, you know, and I certainly can understand the timing of it. I think that if you polled somebody tomorrow and then 2 days later, the answers are going to always flow a bit. But at the end of the day, I think that most of those numbers were fairly telling about what we probably are going to expect for the rest of the year. Jamie, once again, thanks for assembling this awesome panel. It's been very exciting. For those of you out there, obviously every week I talk about the Leads Council at the very end of it. I should probably move it to the very beginning because I think I'm seeing the attendees list start to dwindle down. But look, the Leads Council membership, we've lowered the silver membership down to $500 a year or $42 a month. There's no reason. It's an absolute no-brainer to join. We're bringing you not only this content, but every week we're doing on-air podcasts. We have relevant white papers. We have a brand new buyer's guide that's going to be launched again in a second edition. And so there are so many things that are happening at the Leads Council. This is the time to join. Go over to leadscouncil.org. We have a resource hub. It has all the events that we're seeing both today, in the past, and all the future ones that we're doing every Thursday. We also have our on-air podcast. We have our weekly news hub that's in there. And just recently, we launched our new job board where most of the industry top players are listing their open jobs right now. The space is still alive, still very active. And this is the place to go to. It's the resource hub on leadscouncil.org. Once again, Jamie, Mike, Perry, Donna, thank you guys very much. I really am excited about this. We'll get it up and recorded or broadcast here in a few minutes as soon as I get the video from GoToMeeting. Thank you guys.